And my next guest says housing still has not found the basement yet. She's Emily Sanders, President and CEO of Sanders Financial. Also joining us is Al Kugel. He's Chief Investment Strategist with Atlantic Trust. Nice to have you both with us. Welcome to the program.
Thank you, Maria.
Emily, let me kick it off with you. How much further can we see housing decline?
Well, we haven't seen the bottom yet, Maria. We're expecting the bottom to hit somewhere in mid to late 2008. And really, there is no end in sight at this moment. We had a great run for the last 5 years, and all good things come to an end. So fasten your seatbelts and brace for a further decline in the housing market, at least for another 6 to 9 months.
And when you say further decline, you're talking about home prices moving lower? You're talking about foreclosures moving higher? What are the implications of the housing market decline?
Yes, all of those. The Fed rate cut really precluded a housing depression, but up until that point, we are in a housing recession. So the prices will continue to go down, some in areas of the country more so like California, Florida, others a lot less, but we also will see a continued rise in foreclosures as those adjustable rate mortgages start recalibrating.
Al, do you agree with that? And if so, how do you invest in such an environment? What are you doing?
Yes, I agree with that. All of the measures suggest that housing is still going to be going down. I don't think it's reasonable to look for any kind of improvement before next spring, but housing has been going down now for over a year. It's been a drag on the overall economy about 1 percentage point, so we've been growing just above 2% in the last 5 quarters, which means that everything else is still growing a little above 3%, and this is why the earnings for the S&P as a whole have been coming through better than expected. So it depends on where you're invested. I don't think it's had a lot of negative impact on anything outside of housing and retailing that's related to housing and other things that have to do with mortgage finance. The rest of the economy looks like it's still reasonably good.
So you don't see broad implications in a number of sectors, just those largely related to housing. Emily, let me ask you this. Have you seen a spillover effect into Europe and Asia in terms of slowdown in real estate and declines in housing there?
Well, actually, Maria, there is some slowdown in housing that's already started in Europe, particularly in Spain, where the housing prices had just run up astronomically. A little bit in England, outside of London, which is still a very buoyant market. But yes, there is a spillover, although slight. We still like international real estate very much.
Al, do you agree with that? Have you seen a spillover on international markets? I mean, let's face it, the global growth story has really been the redeeming factor of economic strength as the U.S. has slowed down. Are you seeing that change in any way?
Yeah, you're seeing a change in Euroland and in Japan. The second quarter was already at a lower rate of speed in those economies than it was in the first quarter, and some of the indicators we're getting for the third quarter aren't that strong either. But the real strength in the world is coming in the emerging economies. Obviously, everybody knows about China and India, but it's also true in most places around the Pacific Rim. So that's what's driving industrial commodities up and oil up and gold up. And so those you've got part of the world that's slowing down, and you've got part that's doing very well indeed, and we export to both of those markets.
Let me ask you, Emily, the same question that I'm posing to Al, and that is how you invest in this environment. As we see housing slow down, what have you been focused on in terms of allocating dollars?
Well, we're overweighted in international, particularly emerging markets, as Al said. China and India's story continues, as does other parts of Asia. And also parts of Latin America are really coming on strong after years and years of inflation, such as Brazil. We're underweighting financials because we feel like there's still another shoe to drop, or 2 or 3 shoes to drop, on the credit crisis and the crisis of confidence that started off with subprime and has just trickled through all areas of the mortgage and debt markets.
All right, we will leave it there. Good to have you both on the program. Thanks so much for your insights. We'll talk with you soon.